So that position is where the IC trading, or let me say institutional trading concept. You understand? So now the things you actually look at when you actually want to trade this concept is the equal highs, the initial highs, the imbalance in the market, and the other block. Yeah. So I like explaining everything one by one, making an example. For instance, this is an equal high here. This is an equal high here. Not really equal. Yeah, this is an equal high here. This one too are equal highs. This one really like equal with this yet. So equal high imbalance. Some people call this very very gap. That is an expansion in the price of the market in the firm without, because in the market, the rate at which someone's buy has to be equal to the rate at which its market sold. Let me say that again. The rate at which the market is bought has to be equal to the rate at which what the market sold. So now this is another block. Other blocks are either the bearish or bluish candlesticks left immediately, left before the expansion. So now, as you can see, this black bearish candlestick is our other block. This is our bearish other block. We have a bearish other block and a bearish other block. So we have buy side liquidity, like I said. So now, anytime you actually say equal high, you understand. Judging from all your other analysis, you understand. Anytime you know say equal high, the market tends to what? The market tends to take liquidity there. You understand? For instance, now, combining the little thing I've actually said now to this thing, we already know Eurjpy is actually going to sell. Do you know why? Because fine, there's an imbalance here, there's another block here at this zone, and now equal high, it has to break it to pick sides and to pick others. Because obviously, do you know, as a retail trader, you would have actually like put this as a resistance and say, okay, fine, this being your resistance, it's not going against retail. It doesn't know what you are doing. If now this is your resistance, and this being your resistance, you want to place your what? Your buy stop here that if it should break it. You understand? No. The market already saw that and they are don't actually want you to work there. So what they do most times is what? They break this. You understand? But for us to know where it's actually going to break to before it starts coming down, well, now you come back to use price action strategies again. Judge from the past markets, and if there's no past, no problem, wait for it to recite back into the zone, which is that one I always do. I don't think there's past. Okay. If there's no past, let's continue. So what tends to happen is it's actually going to pick orders here. You understand? It's going to pick orders just to send some people from the market. It pick it, and once it pick it, it rush down immediately. You understand? To pick their stop loss, because obviously if you put your buy stop here, you put your stop loss here. You understand? So they know all these things. So when they go up, like this, you understand? Immediately to be volatile, they'll come down to pick your stop loss and it starts coming here. So now, if they should ask me where's going to be our TP1, this will be our TP1. Because when the market tends to meet an order block, you understand, it tends to change reaction, or it always reacts. And the reaction might actually make it to be a reversal or retracement. Well, other blocks you see in the zones most time always seem to be a what? A reversal. Okay. So, okay, fine. This is the coming. This was the previous low for this. Previous low. How did you add it to your normal price action analysis, which is the law of supply and demand? But this is okay, so you put your stop loss. Okay. So now, if I'm going to take a TP, I'm actually going to take my entry when it's back inside this place. You understand? Then I'll probably take my TP like here, just any significant places. Like one, take my TP here, TP2 here. Then this might be like my last PT because I know it actually reacts once it gets to the head, the zone of the other block. You understand? So where did it be? Like I said earlier, it tends to be a change of reversal, so we already know. Well, the mission to fill in the gap for year has actually been fulfilled. So definitely, if the market's actually coming down here, it will actually move and, and create an imbalance again. I think it should. That's another information for us that okay, we are going long. You understand? So now, and I'll actually talk about Fibonacci retracement so as well. So now, so now, for instance, just learn the way I'm trying to analyze this market. So I'm waiting for it to fall in here. Though I think that actually taking should actually have taken the liquidity, but I just want to make it come here. We've seen the AMA or the sorry the pin bar. So retail traders have actually entered now, but I still need it to go up a little bit so that I can be satisfied. You understand, guys? So now basically I said the market is actually coming down. Now the market comes down, fulfilling this our law, that is mitigating back the other block here that's left. You can call this RTO, which means return to other block. You understand? What's actually going to happen? I said that when that kind of things happen in a zone, because you know this was a zone, this was also a turtle soap. This was a turtle soap before its breakout. You understand? This was sent to pick orders. You understand? And sorry, this was set out to pick orders. It was sent out to pick orders. Boom. You understand? And if you're actually following the law of supply and demand, the one I said in my pro book or the one you watching in my video, you understand? And I was saying anytime there's a false breakout or a turtle so it means the market will change, go in the opposite direction. It's broke out. You understand? So this is more or less like Wyckoff schematics. You understand? So fine. We are saying okay, we're actually going as a long time trader, I want to go bluish for years now. We just have to know what we are doing and it's the market small because the market doesn't belong to us, you understand? So we can't really say we're going to swing, we're going to go long for life, you understand? But it's coming down, I am very, very sure. You understand that? Because it has to come into this other block. I can base my life on entirely on this. Understand? So now having known that one, the 10 is the right time to enter, right? Fine, we'll still come to that. That will be the last part testing. So now, like I said, the things we actually look for is the equal high, the equal low, the previous high, the previous low. Understand? The other block in which we've talked about here, fair value gap, which is imbalance in the market. Imbalance means that the market is still coming to that place to balance it. You understand? And when we are seeing equal highs, just have it in your head, okay, fine, the market wants to. Most sometimes it does not happen like that though. But just have it in your mind that the market wants to what? Wants to take side liquidities, you understand? Either the buy stop liquidity or the sell stop liquidity before it's come back to mitigate and go long or go together. So just as simple as that. Another confirmation of this thing is using couch, which is change of characters, you understand? And I don't think most people actually confuse, you understand, this couch with so many things. You understand that it's actually confusing me too. I won't lie. Because I see so many people drawing so many things about change of character. But to me, I think change of character as, for instance, the market. I don't think okay, the market is actually, for instance, now the market. has a higher high, higher low for the uptrend market, right? Okay. Now for this, I take this as a couch. What happened here as a couch? Because the previous low is greater than, so because this low is greater than the previous low, you understand? So that's like more or less like, where is it? Yeah. Okay. COCH. When this happens, it means changing direction of the market. You understand? COH, change of character. So now, what else do you look at? Um, and another thing is when the market is actually going bearish like this, we switch to that time frame and point this thing out very well. Understand? So now we're actually taking our steps, which is the first step, to analyze your thing with higher time frame. So now let's try and see if we can actually pick our entries from the low time frame on our stop loss and everything. So now we came to lower time frame of 15 minutes. Yeah. So we have step our other block here. Can you see it? We have the open, we have the high and the low. The other block being marked out using this rectangle. You guys. So now, if you're actually going to sell, we'll make this insignificant. Relative to these key levels, our target prices, you understand? At the back of the mind, just have it is having here, it's coming here. This is another block too. I don't really like them because I deal with other blocks in this zone. And let's just put this at the equilibrium. And it's already going up. It has to just liquidate. You guys can come and check it back later. So now the couch that I was talking about is, okay, for instance, now here is the fact that this is not lower than this. You understand? That's spoiled the validation of a downtrend for this. You understand? So this is SMS swing failure. You understand? And most times it means that probably the market has tend to change what in direction. Now, if you see this is a downtrend, this is a lower high, lower low. You understand? There should be another lower high, lower low. But now this is already higher than this. You understand? Judging from what's coming like this, the ziggy, you have the higher high, previous higher high. You understand? So, but now the one that was supposed to be around there is already greater than this. So now we can call this change of. So this is what's I call change of character. That is when the validations of an uptrend or downtrend has been stopped. And all these things are actually being useful just inside the zones. So just find your zones, be a friend to your zone. Be a friend to your zone. Okay, I can call this CHOCH. Yeah. I call this my swing failure, which is what people call SMS. Yeah, understand. So there's something they call point of interest. And point of interest is now this OB, you can just put it as your OB, but this zone, because it's actually happening in zone, you can actually call it your point of interest. That is where you know the market is coming to, and because the market is coming there again, you actually want to buy, and actually your last TP, so your point of interest. So Because it has so many activities around that place. You understand? So you can call it point of interest. If I said we take this tomorrow morning because read then point of interest. I don't know if you understand me, guys. Though this video was specifically made for somebody, Mr. Bender, but since I'm actually going to upload it, that's why I'm trying to like make it the general video. So what else? Wait. And trading this concept, I think you just have to deal with a lot of patience, you understand? And at the end of it, know how you can never make a loss. Even though you make a loss, maybe due to only make some little loss due to market news and like CPI that probably has to break the other blocks and stuff like that. You understand? But with that, if you are not really doing the news and with this strategy, oh, I'm very, 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 very serious. I know sometimes we give the signals and it goes sideways. It's just because I don't actually look at the news. You understand? But the moment I start looking at it, but I just don't want to. But I'm not really like kind of a fundamental person. That's not actually my thing. But the moment if I should start, hmm, I just tend to like stop. And sometimes your news, your news are being helps you with your analysis as well. You understand? For instance, looking at Eurjpy, that means euro is buying against Japanese yen. You understand? Maybe euro now have a news around 2 o'clock, and use your setup by 12 o'clock, and the news quote is okay, maybe inflation, and we have the forecast, we have the forecast, we have the previous, and probably maybe the forecast is actually lower than the previous. You understand? Definitely, we already know that, okay, fine. There are chances that there'll be a drop. You understand? And what you already have here in your technical analysis, you understand, using the SMC analysis alongside the price action, another confirmation for it, okay, this market is actually coming down. You understand? And particular place where you're actually going to take your buy. So now, what you just do is when you sell and the market gets still, immediately close the market and put your buy here. Don't forget what we said. Put your buy here. You understand? The market might tend to run around this other block, but it's coming here. They put their bank levels here and there's the bank levels here, all for a reason. You understand? They tend to say, okay, fine, see this is what I mean. Now, as a related to that, this is a zone. Do you know? This is a zone. This is more or less like a drop, base drop. You understand? And we'll still get to that one actually. This is a breakout outlook. You understand? So the next video we'll talk about that one. But I don't really fancy it actually, but it helps though. It helps. It's more or less like accumulation, sorry, this redistribution and redistribution, sorry. So I said the markets will actually react around this place, but don't worry, it's actually coming here. Understand? This is a zone. The other block is here. We tend to say that, okay, fine. People might try to place their buy here and they might actually go a little bit and they actually want to put what? Their stop loss here. Are you getting me, guys, now? So they come here, it is stop loss, come here before they go. You understand? And we cited this because we actually used the higher time frame and we saw this in the higher time frame. You understand? So now we are talking about fair value gaps or imbalance in the market. This is the space between 3 candlesticks. You understand? They tend to say For instance, let's use this. Can you see the closing position of this and the opening position of this? Those are the fair value gaps. There are 3 candlesticks. And if the same is applicable to this, so as well. Sorry. 1. Understand? This candlestick ought to come down and touch this place. It seems applicable to here. This was even very close, but still. So that's why I'm covering everything as a fair value gap. Okay, see here too. Not touching it. Another FVG. So that's that about that, guys. I still don't believe this thing shouldn't break. This is a small break. Really very small. Well, not really small, you understand? So sometimes I said, how do you know where it's actually going to reach? Sometimes you have to just check. It might be a high. Look for a old high. You understand? So I just go and meet the old high. In this case, this is a old high. Let me switch to lower time frame to see if the space is enough. It's actually okay. You can actually start selling, guys. Actually start selling. So, but let's to confirm it, everything, and let's switch to 1 minute time frame. Let's switch to 1 minute time frame. So what do we do inside this 1 minute? Let's play a little. Let's just go to 5 minutes. Okay, now 5 minutes, we have the double top. Okay. The signal is actually going to sell very soon. It's time to sell. And now 1 minute, let's go again. Let's make some drawings. Okay. So now we can see all right. This is a double top. This is a double top, so it has committed its own here. Understand? So we can switch to 0.5 minutes. I want to try and see that block that will push this thing down. So let's look for fair value gaps within this little place. 3 candlesticks, guys. Let's go together. 1, 2, 3. Okay, fine. Okay, let's say we hopefully wish the markets can come to this place. Then we say this is our right place to sell. Understand? This is our right place to sell, 1. Or perhaps if it is, we should break this channel, which is already doing. Can you see, guys? Understand? Now, you saying you come back after a test, it is actually like possible and impossible because you actually have to know what you are doing before you actually want to say, okay, not to come back after a test. But now, another block was left. Are you hearing me, guys? Another block was left around there. Definitely, the market is actually coming back here for a test. And you're actually going to enter around 159.277. Is that a enter now? Or waste to them? But now, I mean, I'm just telling you normally the way you actually approach and tend to enter. I was actually expecting it to come up a little bit before it's coming down. You understand? So, but fine. Since it came down now, breaking the channel, you have to follow it. If you're an aggressive trader and you're an conservative trader, you have to wait and there's another block left around the place for you to mitigate the first tip of the other block. So that's what about that. And at the same time, when it comes to breaking out, always when it comes to breaking out, to be sure maybe the markets, the pair really broke out, always make sure the hour of the candlestick or this or the time frame of the candlestick you're using, preferable 15, ends outside the structure. It's broke with a real body. That's a confirmation. When it ends with a wick, it's just a confirmation that okay, fine, you know, this is what is how I call it. This is a I want to draw the signal. This is a liquidity hunt. It's as simple as that. You are seeing all these reversal candlesticks under 1 minute. You know, let's check. It ended with a real body outside. So let's expect for the sell. Eurjpy, right? Let me pause the class. So I'm already sharing the signal. And can you see now you guys came back? See how it's going wonderfully. Wonderfully. That's the beauty of trading. You understand? So our first TP, normally probably should just make our first TP should be around here. Because it's the last bearish candlestick before the bullish. So that's exactly what that guys. So for more, because obviously I'm not saying everything, and obviously I didn't start from the beginning. So most times the beginners don't be the to understand this. For those with the little knowledge of the ICT can actually understand this, and those with some also knowledge about trading understand this. So that's that about that. Thank you, and God bless you. Or do you want us to look at another thing? Let me check for good. Oh, wow. Let's check for good. Good. See where we see from. This was my demo. Let me see what's there. Oh. Wow, this is actually a lot, guys, 8,000. So most people actually even ask how other traders, I will not say me, actually making 10K. It's just more or less like you actually know what you're doing. If you can't swing, use a low lot size and swing. This is 0.5 lot size. Well, it's getting much like this because I'm swinging. Now, this is something, if someone should use lot size and has a big liquidity, we actually get the 3,000 around this place. You understand? And those that is 1.5, so many positions, you understand? This is just 3 positions. Imagine I put 10 positions. These around, it should be around like additional, more than 20K. So if you can't swing, you have to have a lot of equity. Those are pro trade accounts. So that's about that, guys. Okay, so I was saying I should try and analyze this, right? Obviously, I'm a little bit tired, but let's go. I actually got the call right now. That was why I posted the video. I need to got to the new money. Oh, I have to go get it. Wow, why is this? I think we actually have to call it a day. Now, see change of character around this place now. I think this fear wants to go up, no? But now, judging from the weekly time frame, I don't think it should be ready to go up for now. Till because we are anticipating the markets to come to anticipating the markets to come to sorry. Anticipating the markets to come to somewhere to come here. See that block here. Equal can you see now, guys? See the equal lows here. Equal lows. This is not even like equal, this equal lows. See the sell stop liquidity SSL here. That's to happen. You understand? And after the liquidity, boom, distribution. So now when it comes to accumulation in the market, let me explain now to you guys now. When it comes to accumulations in the market, you guys need to be very, very careful. And when I'm talking about accumulation, is most times people see it as a chopping market, when people see it as a ranging market. You understand? What I'm saying, when the market is accumulating, you guys need to be really careful. That is, before you enter or say you want to decide, you understand? When I'm talking about accumulating or consolidating is, for instance, maybe we have a flag, you have a red flag, pennant, triangle. Before you decide, maybe it's actually going to be a reversal. That's why Parashon will tell you there's a reversal pennant and there's continuation pennant, type of pennant. So it's left to you to figure out which one is going to be. And you can't decide. It can't tell you, okay, this one I'm forming it with pennant. You have to be the one to know what you're actually doing. And one of the powerful things you just have to know is the power of accumulation. You understand? That happens inside of it. You understand? So now we have the accumulation. After accumulation, there has to be a manipulation. Then after the manipulation, there will now actually going to be a distribution. You understand? In this sense now, that's actually what actually a little bit happened. I don't know anybody is actually similar to familiar with Wyckoff schematics. That's what Wyckoff schematics talked about. You understand? So now in this area now, for instance, let's say this was a ranging market. Brown. But just for us to know where we are going, as long as the market was accumulating here, let me look for another thing to explain. This looks broad. Market always tends to accumulate. It's always. This is still straightforward. This is a flag. It's still straightforward. I'm looking for somewhere that is actually very little bit corny. Wow, everything is straightforward there. But like most times, all you just have to do is you wait. You understand? For instance, maybe it's a ranging market. You understand? Wait a little bit. You start going up, going down. And when you allow, there must always be a manipulation. That's it. When the market goes up and comes back inside the range of what is going, you understand? It's already giving you an insight that the market wants to go bearishly, that there's no way for it bluishly. And when that thing is happening, please make sure that it is ordinary week. Okay, see somewhere around here like this now. This kind of thing should happen now. It's accumulation. See what happened. There's only week that was outside. So I already have the idea that it's going up and it came up. Now see, it's only week that came outside there. It came down. That's it. In accumulation, there has to be a manipulation. And that manipulation is just telling you as an institute trader that okay, it's going in the opposite direction. No? It's as simple as that, guys. Please, I want to stop here. So if you actually want more of this, you can just join us on the boot camp that we are starting on Friday. Yeah. So early bets, I'm actually going to say this in the group, but just to know those that are actually watching the video, early bets can pay 50% off. I think the fee is around $10. I actually make everything very affordable because I don't need to make the money from you, people in particular. You understand? I need to make it from the market. So not like exhausting. But one thing about this thing is like those who pay attention. You understand? So that's it. Thank you guys. Okay. And for all.